All right, so we're diving deep into credit scores today.
Yeah.
You gave me a ton of info to go through.
Uh-huh.
And I have to say,
Hmm.
even I learned some new tricks.
Oh, wow.
Yeah, I thought I knew this stuff pretty well.
Okay.
But we're not just going for good credit here.
Right.
We're going for, like, excellent credit.
Excellent. Yeah.
Like, the best.
It's the best.
Yeah. So,
hmm
where do we even start?
Well, I think it's interesting how much emphasis everyone puts on their credit score.
Yeah.
And
Everyone wants a good one.
everyone wants a good score.
Yeah.
But I feel like a lot of people kind of just stay on the surface level,
Mm-hmm.
you know?
Pay your bills on time.
Pay your bills on time. Don't max out your cards.
Don't max out your cards, yeah.
But there's so much more.
Oh, yeah.
There's a deeper lever.
Like a whole strategy.
Like a whole strategy, yeah.
Okay, so let's back up for a second, though.
Okay.
We have to start with the basics.
All right.
The classic FICO score.
Right.
So we've got, like, payment history,
Right. Yeah.
credit utilization,
Uh-huh.
length of credit history,
Right.
credit mix, and new credit.
Mm-hmm.
I feel like everybody knows that by now, right?
Everybody should, yeah.
Yeah.
But
But what's interesting...
what's really important is the weight of each of those factors.
Okay.
Like how much each one matters.
Okay.
Because payment history
Uh.
and credit utilization
Okay.
make up like 65% of your score.
Oh!
Yeah. It's huge.
So those are the most important.
Absolutely.
Okay.
Like way more than the others.
So, like, even if you have
Right.
a long credit history
Yeah.
and you have, like,
A good mix.
a good mix of different types of credit,
Yeah.
if you're missing payments
If you're missing payments.
or you're maxing out your cards,
you're maxing out your card.
it's not going to matter.
It doesn't matter.
Really?
Yeah.
It's like trying to build a house on a shaky foundation.
Right.
You can have this beautiful house,
Mm-hmm.
but if the foundation is messed up,
The whole thing's going to fall apart.
oh, totally.
Yeah.
Makes sense. Speaking of credit utilization,
Yeah.
oh my gosh.
What about it?
I remember when I was younger,
Yeah.
I really struggled with that
Mm-hmm.
because I thought if I had a credit limit of, let's say, $1,000,
Okay.
I should use all $1,000.
Oh.
Like, that makes me financially savvy, right?
I see a lot of people think that.
Right.
But that's actually a really big misconception.
Oh, really?
Yeah.
Okay.
Because high utilization tells lenders
Okay.
that you're relying heavily on your credit.
Even if I'm paying it off?
Even if you're making payments on time,
Okay.
they still see that as a risk.
Interesting.
Yeah.
So they don't want to see you using
Right.
like, all of it?
They don't want you maxing it out.
Okay.
They want you to keep it
Like under control?
under control.
Yeah.
Yeah.
So what's a good percentage then?
Ideally, you want to aim for below 30%.
Okay.
Even lower if you can.
Oh, wow.
Yeah, the lower the better.
So that means like paying down those high balance cars.
Paying down those high balances is
Yeah.
crucial.
Like that's what really helped me
Yeah.
back in the day.
Yeah, I bet.
Yeah.
And this is where we go beyond the basics a little bit,
Oh,
because a lot of people
yeah.
don't even think about this.
what?
Requesting credit limit increases.
Oh, really?
Yeah.
Isn't that kind of risky?
It can feel risky
Yeah.
because you might think,
Yeah.
oh, now I have permission to spend more.
Right. Yeah, exactly.
But actually, it's all about
Okay.
strategically improving your utilization ratio
Well,
without adding any new debt.
Oh, so like,
Huh.
let's say I have that $1,000 limit
Okay.
and I've used $500.
Right. So you're at 50% utilization.
Yeah.
If they bump that limit up to $2,000,
Okay.
suddenly you're at 25% utilization,
Why?
even though your spending hasn't changed at all.
Okay, that makes a lot of sense.
Yeah, it's all about that ratio.
Ratio, yeah. But isn't it kind of awkward to ask for a credit limit increase?
It can feel a little awkward,
Yeah.
but it's really a standard practice,
Yeah.
and most companies are totally open to it,
Oh, okay.
especially for customers with good payment history.
Right, yeah, of course.
So it's worth it,
Okay.
even if it's a little uncomfortable.
All right. I'll add that to my list of
Adulting
things to do.
Yeah.
Okay, what else?
Well, here's another interesting one.
Okay.
Have you ever heard of becoming an authorized user?
An authorized user
Yeah.
on someone else's card.
Yes. No, I haven't. So if you have a family member
Okay.
or someone you really trust
Uh-huh.
who has really good credit,
Okay.
you can become an authorized user on their card.
Mm-hmm.
And their positive payment patterns
Okay.
can actually reflect on your credit report.
Whoa, so it's like I'm
Yeah.
benefiting from their good credit.
Exactly.
That's like a little boost.
That's wild.
Yeah.
Okay.
Way.
So,
Now let's talk about some of the myths out there.
right.
Because I saw in your research that zero utilization
Yeah,
isn't always the best.
that's right.
I thought paying off your cards in full every month was
Yeah.
like the best thing you could do.
It's definitely a great habit,
Yep.
but some sources actually suggest that
Yeah.
having a small balance,
Okay.
like 1 to 10% of your limit,
Not zero.
not zero,
Okay.
can actually be more beneficial.
Really?
Yeah,
Why is that?
because it shows lenders
Okay.
that you're actively using credit,
Mm-hmm.
but managing it responsibly. So it's like you're not afraid of debt,
Mm-hmm.
but you're not going crazy with it either.
So like a healthy balance.
Exactly, a healthy balance.
Okay.
Yeah.
That's interesting.
Yeah, so it's all about finding that sweet spot.
Sweet spot, yeah.
Yeah.
Okay, so another myth I've heard
Okay.
is that a higher income
Uh-huh.
automatically means a better credit score.
Right. I've heard that one too.
I thought those were somehow connected.
It seems logical,
Yeah.
but they're actually not connected at all.
Really?
Yeah.
Okay.
Your credit score is based entirely on your behavior.
Okay.
So how you handle your debt,
Okay.
how you make your payments,
Mm-hmm.
regardless of how much money you make.
So someone making like
Right.
a smaller amount of money
Yeah.
can still have amazing credit
Amazing credit, yeah.
if they're just
If they're responsible.
responsible.
Yeah.
Yeah. Okay, and another thing you mentioned in the research,
Yes.
not all debt is created equal.
That's a big one.
What does that mean?
So we've got things like
Okay.
installment loans,
Installment loan.
like car loans or mortgages.
Okay.
And then we have revolving credit,
Revolving credit.
like credit cards,
Got it.
and they affect your score differently.
Oh, okay.
Yeah.
Is it because...
Well, think about it.
Okay.
With a credit card,
Mm,
that balance can fluctuate a lot.
right
But-
up and down every month.
Exactly.
All right.
Whereas with an installment loan,
Okay.
it's a fixed amount
Yeah.
that you pay back over time. So
Yeah.
it's much more predictable.
Predictable.
Yeah.
That makes sense.
Yeah. So lenders see those high credit card balances,
Okay.
especially when they're close to the limit,
Mm-hmm.
as a sign of higher risk
Higher risk than like a car payment.
than a stable installment loan.
Got it.
Yeah.
Okay, so it's not just about
Right.
being a responsible borrower in general.
It's more nuanced than that.
It's like you have to know how to manage
Exactly.
the different types of debt.
Exactly.
Okay.
Yeah. It's all about strategy.
Strategy. Okay.
Yeah.
This is so interesting.
I know, right?
I'm learning so much.
It's fascinating stuff.
It is.
Yeah.
Okay, so what else do we have to cover?
Oh, we've got so much more.
Really?
Yeah, this is just the tip of the iceberg.
Oh my gosh.
We're just getting started.
Okay, I can't wait.
Yeah, we're going to dive even deeper.
Okay, I'm ready.
All right, let's do it.
Let's do it.
Yeah.
All right, so we're going to take a quick break
Okay.
and we'll be right back.
That's good.
Wow. Okay, my mind is officially blown.
It is a lot to take in.
It is. I always thought it was just like the overall amount of debt
Yeah.
that mattered, not like what kind of debt it was.
It's more nuanced than that.
Yeah.
It's like credit scores have their own secret language or something.
They really do.
Yeah. And speaking of signals, did you know that even the timing of your payments
Oh, right.
make a difference?
I thought as long as it was paid by the due date,
Mhm.
you were good.
You're good to avoid late fees,
Right.
but for the best impact on your score,
Okay.
you might want to consider paying
Okay.
before your statement closing date.
Oh, so like if I pay it down before the statement is even generated,
Exactly.
then it's like
Then your utilization is lower for that month.
lower.
Yeah.
Yeah.
Sneaky.
It's a little trick,
Yeah.
but it can make a difference over time.
Okay. Now let's talk about something else that comes up a lot.
Okay.
Co-signing loans.
Oh, yeah.
Have you ever had to deal with that?
I've always been hesitant to co-sign for anyone,
Okay.
but I could never quite explain why.
Right?
Like, I just knew it was a bad idea.
Well, it's wise to be cautious.
Okay.
Because when you co-sign a loan,
Yeah.
you're basically saying,
Okay.
I'm equally responsible for this debt.
Oh,
So if that person doesn't pay,
okay.
your credit score takes a hit too.
Oh, wow. So it's not just like a casual favor?
Yeah.
It's like a serious...
It's a serious financial commitment.
Oh, go.
So yeah, definitely something to be careful
I'm
about.
going to be way more careful about that in the future.
Good.
Okay, so
Now, have you ever heard of something called Experian Boost?
Experian
Ah.
Boost. I feel like I've seen ads for it,
Mm-hmm.
but I don't really know what it is.
Well, it's actually a free service from
Right.
Experian
Okay.
that lets you add
Oh.
positive payment history for things like your utility bills,
Oh.
your phone bill, even streaming services to your Experian credit report.
Wait, so like my Netflix bill,
Yeah.
if I pay that on time,
Mm-hmm.
that can help my credit score?
We can.
That's amazing. I
Yeah.
had no idea.
It's a really cool tool,
It is.
especially for people
Yeah.
who might not have a lot of credit history yet.
Okay.
It can really make a big difference.
I'm signing up for that.
Yeah, you should.
It's like extra credit
For being an adult.
for being an adult. Exactly.
Yeah.
Okay, so let's talk about hard inquiries
All right.
because those always make me
To
nervous.
understand.
Yeah, like when I know a lender is checking my credit.
Yeah, it's natural to feel that way.
Yeah.
So a hard inquiry happens
Right.
when a lender checks your credit
Okay.
for a loan or a credit card application,
Okay.
and those can have a small impact on your score.
So every time I apply for something,
Yeah,
it's like dinging my score a little bit.
a little bit.
Yeah. Okay.
But the good news is the impact is usually pretty minor,
Okay.
especially if you're not applying for tons of credit all at once.
Right.
And there's also something called the age of inquiries factor.
Age of inquiries.
Yeah.
What's that?
So basically, the older a hard inquiry gets,
Okay.
the less impact it has on your score.
Oh.
So it's not like
They just stay there forever.
they don't stay there forever. They
Right.
do stay on your report for about 2 years,
Yeah.
but their impact fades over time.
Okay. That makes me feel better.
Yeah.
I thought they were just like going to haunt me.
Nope.
Okay, good.
And another thing to keep in mind,
Okay.
not all credit checks are hard inquiries.
Okay.
So there are also soft inquiries.
Soft inquiries. Okay.
Yeah.
What are those?
So things like
Good.
checking your own credit score
Okay.
or getting pre-qualified for a loan.
Okay.
Those are usually soft inquiries.
And those don't affect your score.
They don't affect your score at all.
So I can check my credit and shop around for loans
Exactly.
without worrying about hurting my score.
Exactly.
Score.
Yeah.
Okay, so we were talking about how not all debt is created equal.
Yes.
Let's go back to that for a second.
Okay.
Because,
Remember, we've got
yeah, we've got like the installment loans.
installment loans like mortgages and auto loans.
Right, and then like the credit card.
And then the revolving credit cards.
Right, and those high balances on the credit cards
Yeah.
can really drag down your score.
Especially when they're close to the limit.
Right.
Yeah.
Even if you're making your payments on time.
Even if you're making all the payments.
Yeah.
A maxed out credit card
Okay.
can really hurt you.
Because it makes you seem risky.
It makes you seem risky.
Yeah.
Yeah. It's like you're relying too much on credit.
Yeah. Okay.
Yeah.
So it's not just about
Right.
being responsible.
It's about knowing
Yeah.
how to manage
the different types.
the different types of debt.
Yeah.
Yeah.
This is so interesting.
Yeah. I know, right?
I never thought about it this way before.
It's fascinating stuff.
It is. Okay.
So another thing I wanted to mention
Yeah.
is closing old credit cards.
Oh.
It sounds like a good idea.
Okay.
Right?
To simplify things.
Simplify. Yeah.
Yeah.
But it can actually hurt your credit score.
Wait, really?
Yeah.
Why is that?
Well, when you close the card,
Okay.
it reduces your total available credit.
Oh, okay.
So if you're carrying balances on other cards,
Yeah.
your utilization ratio could go up,
Oh, I see.
even though you didn't actually spend any more money.
Right. So it's like
Yeah,
those old cards are still working for me.
they are.
Even if I'm not using them,
Exactly.
they're helping keep that ratio down.
They're helping you out.
Okay.
Yeah.
That makes sense.
And closing a card can also shorten your credit history,
Okay.
which can also hurt your score.
Oh, really?
Yeah, because lenders like to see
Yeah.
a long and consistent credit history,
Like you're stable.
stable and responsible.
Okay. So maybe I shouldn't close all those old accounts.
Probably not.
Okay.
It's better to just leave them open,
Even if they're just sitting there.
even if they're just sitting there.
Yeah. Like my little secret weapons.
Exactly.
What
They're
the-
working for you.
All right. So we've talked a lot about
Yeah.
monitoring our credit reports.
Mm-hmm.
But what happens if we find something wrong?
Well, that's a good question.
Yeah.
What if there's an error
Yeah.
that's dragging down your score?
Yeah. What do you do?
Well, the good news is
Okay.
you have the right to dispute any inaccuracies
Okay.
with the credit bureaus.
So I shouldn't just ignore it?
No, you have
Alright.
to be proactive.
Proactive. Yeah.
Yeah.
So how do I do that?
Well, each credit bureau
Okay.
has a process for filing disputes,
Okay.
usually online or by mail.
Okay.
And you'll need to provide specific details about the error
Okay.
and any supporting documentation you have.
So it's not just like,
Right.
this is wrong.
It's not enough to just say it's wrong.
Yeah.
You have to prove it.
Yeah.
So be your own credit score detective.
Oh, I like that.
Yeah.
Okay. So the more details I have,
Yeah.
better.
The better.
Okay.
And then the credit bureaus,
Okay.
they'll investigate the claim
Okay.
and update your report accordingly.
No, that's good to know.
Yeah, so you have some control over this.
Yeah. I feel empowered. Good.
That's-
Yeah.
It's your financial well-being.
Yeah.
You deserve to have an accurate credit report.
I agree. Okay, so we've covered so much today.
We
This
have.
has been so eye-opening.
It's a lot of information.
It is. I feel like I'm speaking the language of credit scores now.
I think you are.
Yeah.
And we're not even done yet.
Right.
There's still more to cover.
Oh my gosh.
Yeah.
I'm ready.
All right, let's keep going.
Okay. All right, so we've come to the final part
We have.
of our credit score deep dive.
It's been quite a journey
It has been.
through the world of credit.
Yeah. I feel like we've gone from like credit newbie to credit ninja
I think you have.
in just a few parts.
You graduated
Yeah.
credit school.
Yes.
All right, so let's recap a little bit.
Okay.
We started with those foundational elements, right?
Yeah, the payment history,
The payment history,
credit utilization,
Mhm.
length of credit history, all that stuff.
the classic 5.
But then we went beyond the basics
We did.
and like discovered a whole world of advanced tactics.
Yeah, we talked about paying down those high balance cards strategically.
Oh, yeah.
And how requesting credit limit increases
All right.
can actually help you
Yeah.
improve that utilization ratio
Right.
and even becoming an authorized user
Oh, my God.
on someone else's card.
That was my favorite.
It's a good one.
I know I'm going to use that one.
Yeah. And then we had those myth-busting moments.
Oh, yeah, like zero utilization.
Zero utilization.
Isn't always the best.
Oh, it always.
Mind-blowing.
It can be counterintuitive.
It really is.
Yeah.
Okay, and then we talked about how income
Doesn't actually
affect your score.
affect your score.
Yeah.
It's all about your behavior.
Your behavior, not your income.
Exactly.
Okay, and what about those damage control tips?
Oh, yeah. For late payments,
Yeah.
like goodwill adjustments,
Right.
negotiating with creditors.
And establishing that positive payment trend.
Right. Those are all good things to keep in mind
Yeah.
because mistakes happen,
They do.
but it's how you recover
Yeah.
that really matters.
And then there are those tools for rebuilding credit.
Yes, like secured credit cards
Right.
and credit builder loans,
Yeah. Those are great for people.
starting from scratch.
Yeah.
Or if they need to repair their credit,
Yeah.
those can be really helpful.
And of course, we have to mention
Of course.
monitoring your credit reports
Yeah.
and disputing any errors.
Absolutely, it's your right
Yeah.
to make sure your credit reports are accurate.
Because they're like your financial transcript.
They are.
Yeah.
They tell your credit story.
They do.
So you want to make sure
It's the right story.
it's the right story.
Okay. Well, this has been amazing. I feel so much more confident about my credit now.
I'm glad to hear that.
I really do.
Yeah. So remember,
Okay.
building excellent credit is a journey,
Not a destination.
not a destination.
Okay.
It takes time
Yeah.
and effort.
But the rewards are worth it.
They are.
Yeah. A strong credit history opens so many doors.
It does.
Better loan terms,
Lower interest rates,
peace of mind,
everything.
everything. Yeah.
Yeah.
It's like a more secure financial future.
Absolutely.
Yeah.
It's all about empowerment.
Empowerment. I
Yeah.
love that.
Yeah.
Okay. So as we wrap up this deep dive,
Mm-hmm.
what's one final thought you want to leave our listeners with?
Well, I would say
Okay.
stay informed.
Yeah.
Embrace those smart strategies
Okay.
and never underestimate the power of consistency.
Consistency.
Because every step you take
Mhm.
towards responsible credit management,
is a step towards.
a brighter financial future.
I love it. Okay. Well, thank you so much for joining us on this credit score deep dive.
It's been my pleasure.
It's been great having you.
Thank you.
And to our listeners,
Yes.
stay curious
Stay informed
and keep diving deep.
into the world of knowledge.
Until next time.